Hello there. Welcome back to Chain Accounting. In this video, we want to look at the preparation of statement of financial position, which is the balance sheet. And we've got question 3.2 is the question that we are going to look at in particular according to this video. So 3.2 reads that the following information relates to OB Traders. The financial year ended on 30th April 2020. So on the credit part, we are given 3.2.1, which reads refer to information 2 and 3. Calculate the missing amounts on the note denoted by A to D, show all calculations. So we are going to the question and try to see what are the missing figures, that is A to D. Then on the part 2, which is 3.2.2, complete the statement of financial position, which is the balance sheet on 30 April 2020. So the first part of the question has got 14 marks, and the second part has got 22 marks. So we are going to look only on 3.2.1 and 3.2.2. So going down to the question to see what do we have in terms of the question, we'll see that you are given information A, whereby you are given a list of balances on 30 April 2020. And then after the list of balances, you are given adjustments and additional information, whereby we have got the additional information 1, which you need to go through before you start to answer the question. And then we've got the additional information number 2, we have number 3, and then lastly, there's number 4. So we are going to go to try to see in terms of the missing figures, that is A to D. That is the first part of the question, whereby we are having our A, B, C, and D, and we are going to find this missing figure. So on the first one, we have our cost. On the first one, we have our cost here, which is the cost at the beginning. Of course, from here to here, it represents balance at the beginning. And then we are seeing that from here, where we are having at the ends, these are the balances at the ends. And from here, from movement, here, which is addition, depreciation, they are just adjustments that are the movements that are taking place during the period. We have got our addition, and then we've got the depreciation, which is representing depreciation for the year. So we are going to find A. And for us to find A, we remember to find the cost at the end, which is this one, 1,200,000. You are supposed to say cost at the beginning plus cost at the beginning plus addition at cost, and then you subtract sorry, if you say cost at the beginning, you add our additions, you are going to get cost at the end. So this is exactly how we are going to present it. But obviously the missing figure is cost at the beginning. So what we are trying to say, we are saying if you say A plus our 600,000, which is representing additions, you're going to get cost at the end, which is 1,200,000. So to find A now, you can just make it a simple formula whereby it becomes 1,200,000 minus 600,000. So this is exactly how we are going to present it in the other section. So the calculation of A, we can just try to go there and present it as such. So we are saying A, we are saying 1,200,000, and then you subtract your 600,000. And obviously, the answer that we are supposed to get is 600,000. Right, then we can go back again to see in terms of the missing figure, which is B. And B, we are seeing that it's the carrying value at the beginning, which is here of vehicles. But we are given the cost and accumulated depreciation. Remember, get the carrying value, you say cost minus accumulated at depreciation. So we are saying 700,000 minus 280,000, then we get you B. So let's try to see. I can go to our answer section now. We are now on B. So on B, we are saying 700,000 and then we subtract your 280,000 rands. So you calculate it like that, you are going to get your 420,000 rands. So this is our B. Then you go to C. Then C, we are given it as depreciation for the year for vehicles. Depreciation for the year for vehicles. So to get depreciation for the year for vehicles, we need to go to the information that we are given in terms of how to, we need to calculate that depreciation for vehicles. So let's try to go to additional information to see if we've got anything that is explaining about how to calculate depreciation for vehicles. So here we are told that point one, on vehicles, a 20% per annum on the diminishing balance method. So we are using 20% on the diminishing balance method. So if you go to our notes, we are being told that there is an addition of 145,000. So it means we've got a new vehicle, and the vehicle that were there at the beginning that stayed the way. So we need to find out how many months did this vehicle stay in the business, which came during the year. So we go to again to that note where we are told about depreciation, and we know that when was that vehicle purchased? On the note part, since a new vehicle costing 145,000 was purchased on 1 August 2019. Uh, 1 August 2019, and our year is ending 30 April 2020. So we can just count the number of months, the whole of August, September, October, November, December, January, February, March, April. And we count the number of months, 1, 2, 3, 4, 5, 6, 7, 8, 9. So we have got 9 months representing the number of months that the new vehicle stayed. So after calculating depreciation, we're going to make a proportion of 9 over 12 because we've got 12 months in a year. So the depreciation is 20%. So remember, when I calculated depreciation using the diminishing balance method, we are going to say percentage times carrying value, whereby you have to find carrying value first by saying cost minus accumulated depreciation of that non-current asset or fixed asset. So in this case, this is a new vehicle, so it has no depreciation yet. So we're just going to take 145,000 as the cost and also as the carrying value. So we're going to say 20% of 145,000, then you multiply by 9 over 12. So we can go there on answer section and make that calculation. Remember, this is the new vehicle. So we can just try to calculate it as such. So we are saying we are now on C. So we start with depreciation. Depreciation of new vehicle. Depreciation of new vehicle. So we are saying it's 20%, which is 20 over 100. We multiply the 145,000 over 1, and then you multiply by the number of months stayed, which gives us 9 over 12. Remember, if you say 20% of 145,000, you're going to get the annual depreciation. Then you make a proportion of the number of months that it stayed there. Let's try to see what do we get there. You're going to get your 21,750. So this is depreciation for new vehicle. Then we go again and try to see depreciation now. Of old vehicle, which we are going to go to the information given. Remember, the old vehicle, we can find it at the fixed asset notes, whereby we are saying at the beginning, we had, remember, you're concerned about carrying value, as we are saying, I using diminishing balance method, as we say percentage times carrying value, of which our carrying value is B, which we calculated in part B, and we got 420,000. So we're just going to say our 20% of 420,000. So 20% becomes 20 over 100. And then you multiply by 420,000, which is the carrying value of old vehicles. And number of months stayed, remember these vehicles were there the whole year, so it's times 12 over 12. This is exactly 1 year. And we get calculate there, we are going to get your answer is 84,000. So total depreciation for the year now. Total depreciation For the vehicles, we are now saying the 84,000 that we got there, and then we add the one for the new vehicle, which we are having here is 21,750. So we calculate it as such, you are going to get a total of 105,750. So this is going to be a total depreciation for vehicles for that current year. Then we try to see another missing figure that we have in that note. Remember, we are at C, now we're at D. So D means the carrying value of vehicles. So basically, to get the carrying value of vehicles, we are going to say use the formula that says carrying value at the beginning plus additions at cost less depreciation for the year. Then we get our carrying value uh, carrying value at the end. So basically, we are saying uh, we got 420,000 as our carrying value at the beginning of vehicles. 420,000, 145,000 with less depreciation for the year, which is the one that we calculated 105,750. So we come here, D. So on D, we are calculating carrying value at the end. So we can just say carrying value at the beginning, at the beginning, and then we add additions at cost, then we less uh, depreciation for the year. This is exactly what we are trying to do here, whereby we are saying our carrying value at the beginning, we calculated it as our 420,000. Then additions at cost, it was 145,000. Then we less depreciation for the year, which is 105,750. And we calculate it as such, the answer that we are going to get becomes 459,250. So this becomes the carrying value at the end. So this marks the first part, which leads us to find the missing figures. That is A to D. Yes, this part. Now we are going to the second part of the question, whereby I say complete the settlement of financial position balance sheet on 3rd April 2020. So we go to our answer section, trying to see the balance sheet as presented in the answer book. This is our balance sheet of Orbit Traders on 3rd April 2020. So we'll start with non-current assets, whereby we are going to start with the fixed assets. So for fixed assets, we are going to calculate the carrying value of these fixed assets at the end. Remember, we've got carrying value at the end here. We've got 1,200,000 for land and buildings, and then for vehicles, the one that we've just calculated. Then we add again 272,000 for equipment. So basically, the figure that we just got for vehicles. So basically, we are saying, let's just try to create some space there. So what we are saying is, we've got for vehicles is 1,400,000. And for vehicles, the one that is just calculated, and we got 59,250. And then for equipment is there, which is let's try to see 272,000. And obviously, the answer that we are supposed to get there will represent the total of the carrying values. And then we add all the three. Let's try to add and see what we get there. So if we are going to mean to get 1,931,250. So again, say 1,931,250. So this is the total for fixed assets. So it's going to come here. It's going to be 1,931,250. So this is what we have, and then we can also check for financial assets if we have them in our question. Remember, fixed deposit is part of the financial assets. You see that according to the information that we are given, we have got fixed deposit is a question mark. So if it's a question mark, it means we are going to find it as a balancing figure. So which means for now we can leave it blank, and then we just put the description of our financial asset. So here we are saying financial assets are represented by the fixed deposit. So we go to the current asset section, whereby we are now saying inventory is pre-entered 270,200. And also we are going to have our trades and other receivables. So we can just maybe abbreviate it as trades and other receivables, as TAOR. So we know that trade and other receivables, we are going to have our debtors control as part of that. So what we are saying is, as part of trade and other receivables, we're going to have our debtors control, and we check for prepayments of expenses, and we check for accruals of income, and then we add them if they are all there, get the total for trade and other receivables. So we come here and check those items. We are here. Right, we start with our debtors control. We have it here, 162,000. We check for prepayments of expenses or accruals of income. We've got accrued income here, the amount of 3,200. Prepayment of expense again, it's here 1,200. So to get the total now, we are saying 162,000 plus 3,200 plus 1,200. So we just go there and summarize that working. So we are saying here in brackets, 162,000 for debtors control. We add our 3,200, and then add again 1,200. And then the total that we are supposed to get there becomes 166,400. So this is what then we move on to a next current asset that we have in the question. So let's try to see which other current asset we have. So the other current asset that we have is cash and cash equivalents. So we are saying cash and cash equivalents. So our cash and cash equivalents, remember, we're going to check the bank balance if it has a debit balance. Remember, if the bank balance is for the credit balance, it becomes a bank overdraft. It has to go under current liabilities. But if it's under the debit side, we're going to check it as a part of cash and cash equivalents. And then we also check for petty cash. We are supposed to edit, and then we also check for cash flow. If it's there in the question, we edit again to get the total for cash and cash equivalents. But also, if we have got part of our fixed deposit that has been transferred, which is being paid in the next, which you are going to receive, which you are going to receive in the next financial period shortly. It's also supposed to be part of our cash and cash equivalent. So we're going to check for those items in the question and try to see if we have got typical items. So if you come here, we have got our bank, which is favorable. When it's favorable, it is a part of cash and cash equivalents, it's an asset. But when it's unfavorable, it's a bank overdraft, which supposed to go for under current liabilities. So we are going to say our bank, which is left 112,000, and then we've got petty cash again, 2,200. So we check if we have got again cash flow to see that we do not have it. So we can just add the 104,000 plus 2,200 to get the total. So we come here. So we are now on cash and cash equivalent. So in brackets, we are saying 112,000 and then we add our 2,200. And then the total that we are supposed to get is 114,200. So this is the total that we, so we see that we do not have any space that we still have for current assets, which means we have exhausted all the current assets that are there. So we are supposed to add 270,200 plus 166,400 plus 114,200 to get the total for current assets, which is 550,800. So we now can get the figure for total assets. Remember, to get our total assets, we say non-current assets plus our current assets. So let's calculate that. So here we are saying our non-current assets, we have got 1 million, or non-current, we've got 1,931,250 plus our current, which is 550,800 to get our total assets, which is supposed to be 2,600,000. So this becomes a first balancing figure. Remember, by preparing the balance sheet, we are trying to abide by the account equation, which says assets is equals to owners, which is equals to owners equity, which is equal to owners equity plus our liability. So right now we have found the figure for total assets, which is this one. So it has to be the same with the total of owners equity plus liabilities, which is the section that we are now going. So we can just go down. So under equity liabilities, owners equity figure we are given it is 2,186,400, which is this one. Now we are going to the non-current liabilities, which we are going to look for. The loan, obviously, the long-term loan becomes a non-current liability. So you can go to the list of balances. Loan, it's a question mark. So it means we have to calculate it either as a balancing figure, or we can try to look in additional information if we have got anything that can help us calculate the figure for loan. So if you come here, you would see that we have loan information number one, loan BTT Bank, interest on loan is capitalized. The loan is capitalized. The loan statement from BTT Bank reflected the following. So we are given balance on 1 May 2019, which is open balance of loan 420,200. We are given monthly installments. There is 103,200. We are given then balance on 30 April 2020 as of 350,400. And then having that now, you are also given a statement below that saying the business plans to pay 40,000 rands during the next financial year. So this one needs to be paid during the next financial year, which means this one represents the current portion of loan. And we have to subtract it from the loan balance and transfer it under current liabilities as current portion of loan. So this is exactly how we are going to adjust it accordingly. So to calculate our closing balance of loan, we are going to say uh, our opening balance here, which is 420,200, and then we subtract the monthly installments, including interest, which is 103,200. Then the answer that we get, we subtract the current portion of loan to get the final balance for loan. So we go on the answer section and present it as such. So we're going to say our loan. This is the loan. And it's a loan for We can just maybe add in brackets now show the working whereby we're saying 423,200, and then we subtract your 103,200, and then we subtract the current portion of loan, which is 40,000. And then the other that we are supposed to get there is this working is supposed to be here for that current liabilities, so we can just maybe remove it there. And now we are saying our loan is here, whereby we are saying our loan 123,200 to subtract 103,200, which are the repayments, then to subtract 40,000. And we are saying the other that we get there is 280,000. And then we move on to the current liabilities. So for the non-current liabilities, we found that our loan is 280,000, which is also going to be the total for non-current liabilities here, which is 280,000. And then we go to current liabilities. Obviously, we are going to start with our trade and other payables. So we can just abbreviate it as trade and other payables. Then we can show the working there. So components of or elements of trade and other payables, we have got creditors control is one of them. And then we check for accruals or expenses. And then also we check for prepayments of income. So we go to the list of balances that we are given and check for those. Creditors control, we see that we have it there. Let's just maybe to make it a little bit clear here. So we are seeing creditors control is here, which is 86,000. And then we check for other payables, which we are saying accrued of expenses, which is at the bottom, 1,800. And then income in advance or prepayments, which is 5,800. So we're going to add the three, 86,000. I will add 5,800 to add 1,800. So I will just go ahead and adjust as such. So for trade and other payables now, we are seeing in brackets, we have 86,000. We add 5,800. We add 1,800. And then the total that you're supposed to get is 93,600. Then remember, we also have a short-term loan that we subtracted here of 40,000 that is supposed to come here as our short-term loan of 40,000. Right. Having done that now, we can be able to find now our total for current liabilities by saying 93,600 plus 40,000. And then the answer that you're going to get there is 133,600. So we have completed. Now we can now add the second part of the balancing figure, which is the other part of the accounting equation, which is now this part of accounting equation. We're saying owner's equity plus liability. And we know that according to our presentation, our owner's equity is we are given it is 2,180,500. Then we add our non-current liabilities, 280,000. Then we add our current liabilities, 133,600. And then we can now be able to find the total for equity and liabilities being 2,600,000. So having done this, you can now be able to find, remember we still have a missing figure. We still have a missing figure that we have here for financial asset. And we know that the balancing figure is what? Is 2,600,000. So this balancing figure should be the same with this one that we have here. So for us now to find the balancing figure as financial asset here, we are going to say, if you say the total for non-current liability, non-current assets, you add the current asset figure, you are supposed to get 2,600,000. So we are saying here, what we are saying is we are saying our non-current asset figure is the one that we don't have, and we add the current asset total, which is we are given as non-current asset, which we are given as 550, 550,800. You are supposed to get the first balancing figure, which is 2,600,000. So if you come in, so we are saying the answer that you get there is 2,600,000. So we can be able to find our non-current assets by saying non-current assets is a something. The formula becomes 2,600,000. So then you subtract 550,000. 550,800. Then we calculate the such, we are going to see that the figure for non-current asset that you are going to get is 2,049,000. 2,049,200. So this is the figure for total for non-current assets. So it's supposed to come in is 2 million non-current asset 2,049,200. So we can now be able to find the figure for financial asset by saying this one non-current asset minus fixed assets. We can get this one 2,049,200 minus 1,931,250. We are going to get to a figure for financial asset is 117,950. So this becomes your financial asset. This is the figure that we are now getting as a balancing figure. So when we did this, when I explained in terms of how did we get the 2,600,000, it was a mistake there. We are supposed to just take the figure. When we arrived here, we are not able to find this total asset figure because this one was not there. So we were just supposed to go down. What we were supposed to do was to go down and check the second balancing figure, because the second balancing figure should be the same with the first balancing figure. So we're just supposed to come here and take 2,600,000 and put it here. And then after putting it here, we can now be able to go back and able to find our 2,049,200 as total for that current asset by this calculation. By this calculation that we did here. Then we take our 2 million and put it there, then we find this figure for total for that for financial asset as a balancing figure now. So that's what we are supposed to do. But in my explanation, it was a mistake that I made in terms of I said what we are supposed to add or non-current asset. I took the figure for fixed asset only, which does not add up to 2,600,000. So I think that one we need to correct it. That when we reach here, we are supposed to take the second balancing figure and put it here, and then we go back to find the non-current asset total. And then after finding the non-current asset total, we can now be able to find the missing figure, or the financial asset as a balancing figure by just subtracting your fixed asset from your non-current asset total. So this is what you guys are going to this video. Hopefully this video was helpful. Let's subscribe and share. Let's keep notified of new videos that are being uploaded as we prepare for exams. I'm out. We'll meet again in the next video.